Everyone, and welcome back for another deep dive with us. Today we're going to be looking at AI and algorithmic trading, specifically in the cryptocurrency market. I think this is something that a lot of our listeners are interested in, so we're really excited to dig into it. The jumping off point for this deep dive is an article. It's called Implementing Artificial Intelligence for High Frequency Trading in the Cryptocurrency Market. And it was published in Blockchain News pretty recently, actually, on August 10th, 2024.
Yeah, it seems like AI is everywhere these days. But in the world of finance and especially crypto, it's really starting to shake things up. I mean, things move so fast in the crypto markets. It's the perfect environment for AI to thrive.
Right. And the article talks about how AI is changing the game with these things called AI-powered trading bots. And we're not just talking about setting up a simple buy low, sell high order. Yeah. These bots are like, I don't know, super traders or something. They can analyze massive amounts of data, both historical and real time. Yep. And spot patterns and trends that would take humans, forever to figure out.
It's not just about the speed, though. I mean, obviously, that's a huge factor. But these AI algorithms, especially those that use reinforcement learning, are designed to learn and adapt as they go. So they're constantly analyzing the market, executing trades, and even adjusting their own parameters based on, what's happening. So it's like they're constantly evolving and getting better over time.
So it's not a set it and forget it kind of thing. This is active, real-time learning. That's pretty intense. But I'm guessing there's some concerns with all this too, right?
Oh, absolutely. There are always challenges when you're dealing with cutting-edge technology. And especially when there's money involved, I'd say one of the biggest concerns, particularly in the crypto space, is security.
Right. Because anytime you have a system that's handling financial transactions, you have to be incredibly careful.
Exactly. So things like data poisoning, where someone tries to feed the algorithm bad data to manipulate the market, is a huge risk. And then you have adversarial attacks, where hackers are trying to exploit weaknesses in the code to, steal funds.
So it's like an ongoing battle. You have developers building more secure systems, and then you have these bad actors constantly trying to find new ways to break in.
It's like a cat and mouse game for sure.
And then on top of all that, you have the whole regulatory landscape to consider.
Right. It's a whole other can of worms. It seems like every time regulators catch up, AI is already 2 steps ahead. So figuring out how to regulate this technology, ensure transparency, accountability, prevent market manipulation, it's a massive undertaking.
Yeah, it really makes you wonder, is the speed of development outpacing our ability to regulate it? Especially in the crypto world, which is already kind of known for being, a little bit of a Wild West.
It's definitely uncharted territory in a lot of ways. And even beyond the security and regulatory concerns, there are some inherent limitations with AI, at least for now. The article talks about how even the most sophisticated AI can only do so much, especially with crypto, which can be so volatile. I mean, you can have news or social media trends that cause huge swings in price. It's tough for even AI to predict that kind of stuff.
So even with all this data, AI still can't perfectly predict the future. I guess that's a relief in a way.
Yeah, it's a good reminder that no matter how advanced the technology gets, there's always going to be an element of uncertainty and, risk in the market.
Exactly. Yeah. But there's also the practical side of things to think about. Like, training these AI models requires a ton of computing power.
Oh, yeah, for sure.
Which translates to a lot of money and energy. So not everyone has access to those kinds of resources. And that kind of creates a barrier to entry. For, smaller players, it makes you wonder if this technology is going to end up concentrating even more power in the hands of a few, or if it could somehow level the playing field.
Right. It's a really important question, and one that researchers are really grappling with right now. But to understand that question a little better, I think it's helpful to step back and look at some of the research being done in this field. There's this really interesting review of 143 different research articles that look specifically at AI applications in financial markets.
Okay, 143 articles. That's a lot of research. What were some of the key takeaways there? What did they find?
Well, one of the things that really jumped out was just how popular AI is becoming in finance. It's not just a niche area anymore. It's becoming mainstream. The review looked at applications in the stock market for RX and, of course, cryptocurrency trading. And within crypto, most of the research is focused on Bitcoin, which makes sense, given that it's the biggest and most established cryptocurrency.
Bitcoin.
Yeah.
Always the trendsetter. But it's interesting to me, what kind of trading approaches they're focusing on with AI? I would imagine fundamental analysis.
Yeah.
Like digging into the underlying value of an asset.
Yeah.
Would be really hard for AI to do.
You're right. That's actually one of the key findings of the review. Most of the research is leaning toward technical analysis, meaning they're using AI to look for patterns in price and trading volume data. That kind of analysis really plays to AI strengths, its ability to process massive amounts of data and spot subtle trends that humans might miss.
So it's less about understanding the intrinsic value of a cryptocurrency and more about predicting how the market will react based on past behavior.
Exactly. It's all about recognizing patterns and then making predictions based on those patterns. And when it comes to building these predictive models, deep learning is by far the most popular approach. Think of it like a supercharged version of machine learning. Deep learning algorithms can handle the complexity and nonlinearity of financial data much better than traditional methods.
Deep learning, neural networks. It all sounds so futuristic. But how do researchers even know if these AI systems are any good? I mean, how do you measure success in something as unpredictable as the crypto market?
That's a great question, and it's where things get a little technical, but it's important to understand. Researchers use a bunch of different metrics, both to evaluate the accuracy of the models themselves and to see how they actually perform in trading. One important metric is the Sharpe ratio, which essentially tells you how much return you're getting for the amount of risk you're taking.
So a higher Sharpe ratio means the AI is making better risk-adjusted returns.
Exactly, and then you have metrics like maximum drawdown, which measures the biggest potential loss you could experience, and total return, which is, pretty self-explanatory. But here's the thing. Even with all these sophisticated algorithms and metrics, the review found that only a small percentage of AI-driven trading systems are fully automated.
So despite all the hype, human traders aren't obsolete just yet. Why is that?
Well, there are a few reasons. First, AI is still pretty young in this space. The technology is constantly evolving, and there's a lot of room for improvement. Second, even with all the data in the world, the crypto market can be incredibly unpredictable. You have things like regulatory announcements, security breaches, even Elon Musk tweeting something can cause huge swings in price. It's hard for AI to account for that kind of irrational behavior.
So it sounds like human oversight is still necessary, at least for now. It's going to keep an eye on the bigger picture and step in when things get too crazy. But the review also mentioned some pretty impressive results from AI applications, right?
Oh yeah, absolutely. There are some really interesting findings. One study that stood out used to support vector machine, or SVM model, to predict cryptocurrency prices, and they managed to hit a 95.5% accuracy rate.
Wow, that's pretty incredible. Are there any other examples that kind of showcase what AI is capable of in this space?
Yeah, another one that caught my eye was a study that used back propagation neural networks to forecast Bitcoin prices. They got a 90% accuracy rate during their training phase and 10% for forecasting precision, which is still pretty significant considering how volatile Bitcoin can be.
Those are some pretty impressive results. It seems like this research really highlights the potential of AI to, disrupt the cryptocurrency market.
Yeah.
But something we haven't talked much about yet is high-frequency data. I know you're a bit of a data geek. So what's the big deal with high-frequency data in this context?
Oh, it's all about granularity. High-frequency data captures every single trade, every tiny fluctuation in price, every bid and ask order. It's like having a super-powered microscope. That lets you see the market breathing in real time.
Okay. I'm starting to see the appeal. But how is that kind of data actually being used in research? Is it just about finding more signals for the AI to crunch?
It's definitely about finding more signals, but it goes even deeper than that. Researchers are using high-frequency data to monitor trading activity in real time, to understand how prices are actually formed, and even to evaluate investor behavior on a granular level.
So it's not just about predicting what the price of Bitcoin will be tomorrow. It's about gaining a much deeper understanding of how the entire crypto ecosystem functions.
Exactly. And the article actually points out that there was a huge surge in publications using high-frequency data after 2018, which shows just how quickly this kind of analysis has become essential in the field.
So researchers are realizing that this incredibly detailed data holds the key to unlocking a whole new level of understanding. But can you give me some specific examples of the insights they're gaining? Like, what are they learning from all this data?
Well, one area where high-frequency data is having a big impact is in market microstructure analysis. This is all about understanding the nuts and bolts of how the market actually works. We're talking about things like bid-ask spreads, order book dynamics, the impact of different types of orders. High-frequency data lets researchers see all those tiny details that would be invisible with traditional data sets.
So it's like being able to zoom in and see the individual atoms of the market instead of just the overall molecule. That's pretty cool. But what about understanding investor behavior? How does high-frequency data help with that?
That's where it gets really interesting. By analyzing trading patterns at such a granular level, researchers can start to identify those little behavioral quirks that we all have as humans, like herd mentality, where we follow the crowd, even if it's not in our best interest.
Or like FOMO, the fear of missing out, which is probably pretty common in the crypto world.
Oh yeah, definitely. And then there's loss aversion, where we're more afraid of losing money than we are excited about making it. By understanding these biases, researchers can start to build more nuanced trading models that take those biases into account.
So it's not just about the raw data. It's about understanding the psychology behind the data. I imagine that gets pretty complex.
It does, and it raises some interesting questions about how this knowledge can be used. Could it be used to exploit those biases? Or could it be used to educate investors and help them make more rational decisions?
I guess that's the double-edged sword of any powerful technology. It can be used for good or for, less than good purposes.
Right. But ultimately, having more data and better analysis tools can only be a good thing. It allows us to make more informed decisions and hopefully mitigate some of the risk inherent in the cryptocurrency market.
That's a great point. The more we understand, the better equipped we are to navigate this world, this wild and exciting world of crypto.
Exactly. And that brings us back to AI. We started with AI-powered trading bots, and now we're back to them. But this time armed with even more data, more understanding, and more sophisticated tools. It's a fascinating cycle of innovation and discovery.
It makes you wonder, where will this all lead? Is AI going to completely take over the trading world, or will it always be a partnership between human and machine?
That's the million-dollar question, and one that we can't answer definitively right now. But what we can say is that the pace of innovation in this space is incredible. What was once considered science fiction is quickly becoming reality, and that's both exciting and a little bit scary.
It's definitely a lot to wrap your head around.
Yeah.
But I think that's what makes this whole topic so fascinating. We're at the forefront of a technological revolution, and the implications are still unfolding.
I couldn't agree more. It's a time of tremendous opportunity, but also a time for caution. We need to approach these developments with a sense of wonder, but also with a healthy dose of skepticism.
I think that's a great note. To kind of transition to the final part of our deep dive, we've talked a lot about the technology and the research, but I think it's important to also consider the broader context. You know the potential implications of all of this for the financial landscape and for society as a whole.
I agree. It's not just about the tech itself. It's about how this is going to impact our world and what kind of future we want to create with these powerful tools at our disposal.
Right. It's a big question.
Yeah.
And one that deserves careful consideration. So let's dive into that in the next part of our deep dive. Stay tuned.
Yeah, it really is a fascinating time to be watching this space. The convergence of AI, algorithmic trading, and crypto, it's like a perfect storm of innovation. And it's forcing us to ask some pretty big questions about the future of finance.
Like what kind of questions? I'm curious to know what's keeping you up at night.
Well, for one, as AI gets even more sophisticated, how is that going to affect the balance of power in the financial markets? Will we see a future where machines are calling all the shots, making decisions that impact millions of people?
It is kind of a scary thought to think about algorithms controlling so much wealth and influence, but also kind of exciting in a sci-fi way. What else?
Another big question is around regulation. Can governments and regulatory bodies keep up with the rapid pace of innovation in this space? Or will we see this ongoing tension between technological advancement and the need for oversight? How do you even begin to regulate something that's constantly evolving and often operates across borders?
Those are definitely some weighty questions, and it doesn't seem like there are any easy answers. But I guess that's part of what makes this whole topic so compelling. It's not just about the technology itself. It's about the potential impact on society, on our economy, on our lives.
Absolutely. And it's not just about the potential risks. It's also about the potential benefits. If we can harness this technology responsibly, there's a real opportunity to create a more efficient, more transparent, and more accessible financial system.
That's a great point. It's easy to get caught up in the hype or the fear surrounding AI. But it's important to remember that it's a tool. And like any tool, it can be used for good or for bad. Ultimately, it's up to us as a society to decide how we want to use it.
I think that's a really important message. This isn't something that's happening to us. It's something that we're all shaping through our choices, our investments, our engagement with these technologies.
Well, I think we've given our listeners a lot to chew on today. This deep dive has really opened my eyes to the incredible potential and the potential challenges. of AI and algorithmic trading in the cryptocurrency market, it's clear that we're just scratching the surface of what's possible.
I agree. And I think the most important takeaway for our listeners is this. Don't be passive observers. Stay informed, ask questions, challenge assumptions, and engage in meaningful conversations about the future of AI and finance.
Because ultimately the future is not predetermined. It's something that we're all creating together.
Well said. It's been a pleasure exploring this fascinating topic with you.
Likewise. And to our listeners, thanks for joining us on this journey. We hope you found it as thought-provoking as we did. Keep learning, keep exploring, and keep pushing the boundaries of what's possible.
It really is a fascinating time to be watching this space. The convergence of AI, algorithmic trading, and crypto, it's like a perfect storm of innovation. And it's forcing us to ask some pretty big questions about the future of finance.
Like what kind of questions? I'm curious to know. What's keeping you up at night?
Well, for one, as AI gets even more sophisticated, how is that going to affect the balance of power in the financial markets? Will we see a future where machines are calling all the shots, making decisions that impact millions of people?
It's kind of a scary thought to think about algorithms controlling so much wealth and influence, but also kind of exciting in a sci-fi way. What else?
Another big question is around regulation. Can governments and regulatory bodies keep up with the rapid pace of innovation in this space? Or will we see this ongoing tension between technological advancement and the need for oversight? How do you even begin to regulate something that's constantly evolving and often operates across borders?
Those are definitely some weighty questions, and it doesn't seem like there are any easy answers.
Yeah.
But I guess that's part of what makes this whole topic so compelling. It's not just about the technology itself. It's about the potential impact on society, on our economy, on our lives.
Absolutely. And it's not just about the potential risks, it's also about the potential benefits. If we can harness this technology responsibly, there's a real opportunity to create a more efficient, more transparent, and more accessible financial system.
That's a great point. It's easy to get caught up in the hype or the fear surrounding AI, but it's important to remember that it's a tool. And like any tool, it can be used for good or for bad. Ultimately, it's up to us as a society to decide how we want to use it.
I think that's a really important message. This isn't something that's happening to us. It's something that we're all shaping through our choices, our investments, our engagement with these technologies.
Well, I think we've given our listeners a lot to chew on today. This deep dive has really opened my eyes to the incredible potential and the potential challenges of AI and algorithmic trading in the cryptocurrency market. It's clear that we're just scratching the surface of what's possible.
I agree. And I think the most important takeaway for our listeners is this. Don't be passive observers. Stay informed, ask questions, challenge assumptions, and engage in meaningful conversations about the future of AI and finance.
Because ultimately, the future's not predetermined. It's something that we're all creating together.
Well said. It's been a pleasure exploring this fascinating topic with you.
Likewise, and to our listeners, thanks for joining us on this journey.
See me.
We hope you found it as thought-provoking as we did. Keep learning, keep exploring, and keep pushing the boundaries of what's possible.